Tuesday, October 10th, 2023. Market analysis, Stan Ehrlich. Almost 10 o'clock California time. And we have the rally from the bullish engulfing ER buy signal on Friday continuing like crazy. We are currently up 440 on the S&P. And by the way, I start out with the stock market indexes each time and usually the spider. But here we've got the December futures E-mini. It looks like it's beginning to flatten out in the last hour or two, but we're already up almost we were up 5 points at the high of the rally, which is a darn good up day lately. And including, I'm showing you now, the ER3, which buys a retracement, got long the spider, the E-mini early Sunday morning during that session, and is still long. That's the green line. And our protective smart trailing stop STS has been rising substantially with the market this morning. I could play with this and tighten it up more if I was so inclined to be a shorter term trader, but a longer term or intermediate swing trader would leave it medium like it is, or slow it down for an investment style. But the point is, we got in almost at the exact low when it reopened after Friday's reversal. This is the ER3, not the ER1. ER1 did great. All right. The daily data chart on the December E-mini has rallied above the neckline, or the old, I should say, neckline of a previous head and shoulder top that was until Friday working just fine. I saw it in advance, told you about it back when it was at something like late August, probably, maybe even mid-August. Anyway, the formation was great. We did very, very well on that decline. And all of a sudden, out of the blue, we have a giant reversal on Friday. I told you it was coming in October. Again, the last 30 years, we've bottomed out in some degree or another in October 90% of the time. And it looks like it just happened again. So that's 90+%, if we're right. So far, so good. The important part is we rallied above the neckline, which basically kills head and shoulder, period, even though it started to work really well and got down, I would say, well over half or about half of the minimum downside objective, which was 4,000, and it's not anymore. I will probably erase these lines, except maybe I'll leave the neckline in of the old pattern, because that is still a relevant support level as you might come back down to it again. So next chart is spider, of course, SPY. It has also, as you would expect, rallied above its neckline, but the spider SPY had a gap to close back on September 20th to the 21st. So it's almost closed. Today's rally has covered half of the old gap that was left, and it may still close the gap completely today. I would not be surprised. We're up there. We're close to the highs. We're just floundering around a little bit. I know 5 points higher. Currently 444 is higher on the day is a nice chunk, but markets take off like a bat out of hell sometimes. Okay, and that looks exactly like we just did. You realize in basically 2.5 days, we were almost at the lowest low for the decline since, well, July 27th, the high, which was a bearish engulfing ER sell signal, right smack at the top. And we also got mini buy signals on October 13th of 22. So we're on our way, in my opinion, up. I'm going to try to pick off rally highs and break lows as it continues to work higher. I do expect that there's a good chance we could see a new high above the July high. And again, that was July 27th, before the end of the year. But there's a Santa Claus rally coming, remember that, and therefore there should be some kind of a modest decline in early December. Next chart. August, QQQ has never broken out of the formation in the first place, and neither did the NASDAQ. Next chart. But look at this. It rallied up 2 days ago on the initial move up, and that was the green bullish engulfing for the other indexes. This is a bullish engulfing candlestick, but not an ER, because we didn't have an oversold condition. It was a few days earlier at the neckline, never broke below it. So this head and shoulder never even got a start. It formed, but the engine never got started. Next chart. NASDAQ futures, same story, of course, came down to the neckline and never broke below it on a closing basis. New highs now for at least a couple of weeks, probably 3. And we are actually beginning to get into a little bit of resistance. I would say my cursor right now is probably maybe a little bit above the beginning of resistance, but it's not very clear. I haven't got a really great number to come up with. Probably 15,685 is looks like a pretty good number. 15,685 for the NASDAQ futures in the next few days. Wouldn't be surprised. This week, DIA is not yet above its neckline. If I am right about the other indexes going up and up and up with the usual downside correction, the DIA is not going to stay here. It's going to rally above the neckline, but when? Maybe this week. It's going to take a little longer. It almost got to its downside objective, I would say 3/4 of the way, and then Friday hit. So it's just going to take a little longer. The Dow, well-financed industrial. Next, the Russell 2000 is moving up with a Friday ER buy signal in green. Is just great. This market is building a whopping huge major long-term bottom. It is a very large trading range that has going basically back a year and a third, year and a half. Highs that have been slowly lower than each other, not by much, pretty flat, and bottoms that have been slowly higher than each other. That is a definition of a gigantic pennant formation, but I haven't seen any of this size for, God, decades, so unlikely. And if we're at the bottom of the trading range, why not come all the way up at least to the 195-ish area soon? Next chart is a spider 1 minute. We're seeing a little bit more weakness, so we're down to 416 higher instead of 5 points. Typical correction. Remember, it's only 10:03. There's still 3 hours of the day left. All right, let's go to the micro E-mini, which is basically the same chart. We did get a buy signal on Friday in a micro E-mini, and we got a sell signal on the very top of the market. In fact, we got 3. One of them was the highest high, and that again was July 27th. So neckline broken, no more bearish pattern, kill the objectives, kill the downside measurement, and maybe leave the neckline to remind me, but I'll see it anyway. So that's pretty much for the indexes and futures. The E-mini again, because it is one of the most popular markets. You look at it from a different vantage point, you see different things. No real change in comments. I'm going to have to erase some of the lines, of course. The next chart is the NASDAQ. I never did draw in the details on this particular chart on purpose because I wanted you to imagine the shoulder and the head and the shoulder over there. So be it. Now this pattern's gone, and all this is basically a bearish support line. You could call it the bottom of a channel. And hey, actually, if you draw a line across these tops, it doesn't look like it's too off parallel, but it is. Next. Bonds. Do we have on Friday also a major bottom? I can't tell. It's too soon to say. I can say this. We were oversold for 2 weeks. Very unusual. The level of oversoldness, so to speak, was even below 10, and that was on October 4th. And slightly very close to it, the low day, which is not unusual, a little differential in there. Divergence. So what does that mean when we get down to 10 in an RSI? I don't see in the time frame being displayed a 10 on the RSI level going back in time. They never got down to that cursor level, and I'm going to show you what I've got in memory at the moment. So that's it. The last time it got down to 10 was at least for 2 years, at least for a year ago. Okay. Need I say more? It could have been a major bottom. Too bad I didn't get a green bar. Next, 10-year notes. Same kind of commentary. What is the first upside major resistance in the 10-year notes? 109.5-ish. And on the bonds going backwards, that red zone up here, I'll pull it over because it's still going to be very, very relevant here in the next few weeks, I believe. That's my minimum upside objective at the moment, 117.18, let's call it, on the bonds. And next would be the crude oil. I mentioned it could come down and close the gap. It looks like it's starting to do it already. And that comment about the gap was yesterday. So let's see it bounce off of 83.5 for a low in the next day or two or three. I think it's still headed up, but that would be a perfect spot to get in. Next, heating oil at resistance, poking its head above resistance very slightly. I could justify raising the resistance level a little bit, but I'll leave it where it is at the moment. And I would like to see it close a little lower where it is right now, or a lot lower than where it is right now. I think the downside correction isn't finished. I think this is a rally simply in a bear move down to this significant support area at 2.60. Next chart. Natural gas, overbought. It did clear resistance as it's done before, but there was overbought conditions involved in every occasion, and it turned down. Sometimes with a pretty good sell signal, close but not at the highs. The system's built for picking bottoms to the day and tops to the day. Next chart. That's a high to the exact day. What are we looking at here? Gold. And on Friday, gold did have a bullish green ER buy signal. We have a gap to close. Now, it's not trying to do so today, and it may accelerate a little bit more before it tries to come back down and close this gap. I can't tell, but I do not expect it to drop down into the bullish price range from Friday unless it stops and closes the gap, which would be the very high of Friday, and then turn up. If that happens, I expect it to happen pretty darn soon, this week maybe. Otherwise, we're unlikely to go sideways, and I think there's only one choice left, higher. Next, silver. Bounced off of support really nicely last week. Now it's coming up to resistance, maybe another little pop up here this week and stall out. It is not getting close to overbought. So I will not have that excuse in a few days. Maybe if it does something really weird, I could justify it, but maybe it's going to be a more important broad support area turning point. Can't tell yet. Next chart. Platinum. Buy signal on Friday worked great so far. Higher high today than yesterday, of course, than Friday. And each day so far has been, of course, there's only been one day, Monday, after the Friday reversal, higher, but today is a little higher at the moment, but barely. And I'm hoping it'll rally a little bit more. And the problem we've got right now is today's high is almost smack dab at a bit of a resistance. You go back a month or two and you see a bunch of lows. There's a little bit of evidence in here, not very much, but there's a bunch of lows right there. So they're all around the same price level. It could back up a little bit and then go higher. We have an outside down day, bearish engulfing, but it's not overbought, so we're not getting a sell signal. And high-grade copper looks like it's about to make new lows. Next chart is soybeans is not coming back up very well. Other than the oversold condition, which could cause it to rally back up into this resistance blue area, I don't expect too much more. Longer term, it does look like it's turning down, and the major long-term support area is starting to get chewed into. If we start closing a little lower than today's lows in the next few days, sooner the better, I'm going to stick with my downside objective of 1070. Yep, this is a big one. It's basically 1270 right now. Next chart. Bean oil has broken out of and is doing very nicely a head and shoulder top. Sorry, These things have popped up a lot all of a sudden in the last few months, but this one's working great, including, of course, today. One minor problem, and it's actually very similar to the stock market indexes. It's getting oversold yesterday and today, dropping off very sharply. Now it is, coincidentally enough, about 2/3 the way down to its minimum downside objective of around 50 at 52.80, but its last couple of days down, this is no place to be going short. This is a price range with the right kind of activity to be looking for minor, I would expect, buy signals. I ain't got any. So it could keep dropping more. It could even reach the minimum objective very quickly, like in a day or two. Look at the rate at which it's falling. That's super fast. Next chart. Soybean meal. I want this to break out to the downside. It refuses the last few days. It did get a little oversold about 6 days ago, then 5 and 4 days ago, and that was right smack at the neckline of the big pattern. This is very wide shoulder, and the head and the last shoulder is very wide. I discount this rally in here. I don't think it's part of the formation, so it doesn't really fit. Otherwise, you've got a good fit with a bunch of stuff. If you happen to want to incorporate this, then theoretically there's supposed to be, what do we got here? About 4 months from now, a rally around the same red zone and then down, and I don't buy that. So I think things are finished in the pattern. It just needs to very soon break out to the downside. Minimum downside objective about 252. Excuse me. Next, we got corn. I think it's heading south. I think it's going to do the same thing that wheat has been doing, and here's wheat. So I'm looking for lower levels, and both don't really have any downside objective. Basically looking for buying opportunities for maybe a longer term objective because of such a low price, in particular wheat. Next, we've got live cattle. Every time, well, the last 3 occasions we picked the high. We picked the high, and we picked the high. All 3 of them to the exact day since the beginning of June. There were 2 other sell signals very close to the highest high in the process of topping out for a while. A couple of them were only 2 or 3 weeks down, but still the highs. I got one on September 19th, told you about it, rallied up. We got short. We had a little bit of a loss for a day or 3 or 4, but kaboom, we're on our way down, doing great. Next chart. Live hogs bounced off support and bouncing off a little bit of resistance. I think it's going to test that support again, maybe this time at 67, 70, 80 area. Not going to hold. Next chart. OJ. I told you yesterday that I finally found out, because I'm not a fundamentalist, that apparently something called green tree disease has been affecting basically the whole damn Florida crop of oranges. That's why the price of orange juice has gone skyrocketing an unbelievable amount here for a long time, frankly. This disease apparently takes a long time to discover and to stop. Is this going to be like the California grapevines that got that French fungus and we had to replant the whole crop? Oh, that's right, with French vines. That was it. Anyway, interesting corollary. Now, here it is. Watch out. I'm warning you. This is a bullish engulfing outside up day, but it is happening in an unbelievably overbought level that we've been in for several times, about 90 or almost 90, just the last couple of days. That is a very high warning. The market's about to turn. But Mr. Ehrlich, it doesn't have a bearish engulfing red sell signal in progress. In fact, we have the exact opposite. I don't know what to call this, but my nickname is Bass Ackwards. Yuck, yuck. So this is an outside up day in overbought conditions that can sometimes, I haven't seen it happen very often. It's pretty rare if it stays here. It looks like it will. Top. So just mentioning it, I'm not turning bearish yet. I've just seen this happen before, but they're real difficult to handle. If you choose to do something about what I just said, my fail-safe buy stop would be above the high of today. So the risk factor is pretty small. Next chart. Okay, here we go with a little bit of forecast. I talked about another rally coming in cocoa, maybe. And that was starting a couple days ago when we popped up over a line that looks like it could be a neckline. Way too soon to tell you it's a neckline, but this is my favorite pattern. So why not start talking about it? There's the shoulder, sell signal on the first shoulder. New highs, overbought condition, dropped down to almost the same price levels as before. So it's a relatively flat line, and they're hardly ever exactly flat. And here comes the rally, maybe. I've drawn in a little arch mark in the next, what do we got? 2 or 3.5, 4 weeks at the most time frame, up to which and back down, I'm looking for a rally high to create the last shoulder. It essentially matches that kind of thing right there. So what I've done is just duplicate it in the future at around that's about right. We'll see what happens. Next chart. Coffee, bullish engulfing today, probably closing higher and pushing back up against resistance several times. There's no real downside follow through here. We are at a previous very important low in early January, or very close. So there's no reason for today's low to be an exact low, but, you know, ballpark. And the fact that it's had a bullish engulfing today probably adds to the likelihood that we could see another decent rally. I think maybe there's another rally starting. Next chart. Sugar, don't really want to comment yet. Looking for some probable sell signals, but I ain't getting nothing. No comment. Next is cotton the rag. Here we go. New lows for a few weeks. Probable closing at the lowest level in a few weeks. And a very minor at the moment downside breakout. Looking for lower levels. And it could easily be down to the ballpark of 76.30. Next chart. E-mini is coming down a little bit. Now, I don't want it to drop so much that it's closing back below the neckline. That's going to cause problems. Plus the fact that it might close even lower on the day, making new lows. That would not be nice. I'm going to leave you with those commentaries. We'll track the October low chart tomorrow. Have a great trading day. Thank you.